Spring statement, good news or bad news for small business owners? I'm going to let you know. As business accountants, my team and I spend all day long helping business owners on their journey. And of course, one of the key points of the year, there's kind of two of them, I suppose, where we sit down with our lunch and wait with bated breath to see what's happening, is the spring statement and the autumn statement. So all the budgets, the mini budgets, depends how you look at it, but ultimately the Chancellor stands up in Parliament and says, here's some stuff, normally financial, about the country's finances, tax particularly. So for us geeks, we love it. We get lunch in at work and we sit there and watch it. I did it from my bedroom because I had COVID, but whatever. This year, there were some really interesting points. And I wanted to talk to you about the highlights. So it's not going to be an in-depth look at a lot of it. I'm going to link you to some of the other bits, but I want to tell you about the bits that really matter and also give you a little bit of opinion around where I think we're kind of headed as we go through this. So let's get into it. But before we do, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So let's start off with some of the headlines then, the headline stuff. One of the things he was very keen to announce is that the tax rate is being cut in the basic rate for income tax. So what that means is, if you don't know what that means, is that if you earn under around £50,000 a year, then that's what's known as the basic rate. And at the minute you pay 20% tax in there. In 2024, that's going down to 19%. That's the first time in about 16 years that they've done anything like that. So that is fairly unique. There's some political discussion around actually, is that necessarily a tax cut, bearing in mind that they've frozen the allowances for 4 years. It hasn't moved. So as inflation is going massively up, actually, the impact of that's not great. But ultimately, a 1% tax cut's a 1% tax cut. So you've got to look at the positives, I suppose. So that has been announced, but it's not going to affect you right now. So when your utility bills go up in April, you're not necessarily going to feel that, but do know that that is something that's coming. But what you will feel, again, not necessarily in April, but July this time, is that the Chancellor announced that they're going to align national insurance and tax thresholds. So it's one of the real oddities of the system at the moment, and it catches a lot of startup businesses out, is that you've got these two thresholds. You've got your tax threshold at about 12,500 quid, and then you've got another threshold that's about 9.5 grand, that's your national insurance. So you start paying national insurance way before you pay tax, and that catches people out because they think, well, I don't need to do a tax return, I don't need to pay any tax. But they've done, say, 10 grand and they do need to pay national insurance. So there's all these limits going on, and all they've done is they've just equalised them, and so they're the same now. So it's about £12,570, and at those levels, you're going to pay tax and national insurance. Now that's quite good, because that's depending if you're self-employed or national or employed paying your national insurance, you're going to pay somewhere between either 9 or 12%. So that's quite a good saving on those 2 years. Again, there's arguments about thresholds and all the rest of it. Now, of course, that would be amazing news if the other side of April, your national insurance wasn't effectively going up by 1.25% because of the introduction of the health and social care levy. Now what this means, as the first thing I did was get a calculator out and have a look, is if you're around £34,000 income, the total of those measures, so the increase to the social care levy versus this increase to the threshold and everything else, you're probably better off. If you're earning under 34k, you're going to be better off. If you're earning 34k and over, you're probably going to be slightly worse off as the years tick on and as your income levels goes up. So there you go, give you some food for thought about whether it's an overall benefit. It was quite an interesting statement in that it was a kind of like a bit of a take with one hand, give with another type idea. But ultimately, I'm pleased as a kind of an overall concept to see those two things aligned, because I think it just makes people's understanding of it easier. So that's good. So you might be thinking, as a director of a limited company, like, does this national insurance threshold thing affect me? The answer is possibly, and I think I'll do another video on it. But in certain circumstances, yes, there is a small tax win that you can do by adjusting the level of pay that you pay yourself versus your dividends. But I think I'll cover that in another one as the details become clear. So that's for individuals, but if you've got a team, it's not quite as exciting. So just a quick recap on what happens at the moment is that you pay national insurance on top of your team's national insurance, but you actually start paying that at a lower rate than they do. So they can earn, say, 9.5 grand before this change, before they started paying national insurance. As an employer, you pay national insurance at a lower level. There's different limits. Again, there's complexity in the system. But that's what happened. They're not moving those limits in line with this new threshold either. So you're still going to be paying national insurance at a lower level than the employee. So it's good for them, not so good for you. And because of the health and social care levy, your costs have gone up to 15.05%. It's pretty substantial. But where there is a slight easing and some good news is that the employer's allowance, so we've done other videos on this, is going up to from £4,000 to £5,000. So that allowance allows that 15% that you've got to hand over, you can use that allowance against it. So your first £5,000 a year now, gets written off. So there is some things you've got to do to be able to claim that, and I will link another video where we talked about that previously, because we see client after client coming to us doesn't even know that's a thing. So, but it's a very good relief, and I think it's a very welcome change. So if you're a limited company and you're into innovating, you're creating new products and things like this, you would have come across, or should have come across, something called research and development tax credits. Always sounds like it's some sort of personal lab coat, and it's only like medical science and things like this, but it's very applicable to a lot of small business situations. And there's this tax credit that's phenomenally good and is actually can repay you quite a bit of corporation tax. So that's out there already. And what they have announced is they're going to widen some of the relief, because they still see a problem in the country where we're not innovating enough. And it's one of the key things they see as a way to go and, you know, get that done. But I think for me, they could do with changing the name maybe. That might help some of the perception of it. I know it's a silly thing, but I think a lot of people just aren't aware of what they could claim. But yeah, so good news. Again, I'm not going to go into the detail of that one because it's pretty boring and long, but let's just say they're widening what you can claim. So if you are innovating, do have a look and get into and do your research on the research and development tax credits. Now, a couple of other bits where there is some impact on household incomes. So I've seen the different arguments online and this, and I can feel this pain, is there wasn't actually that much announced at ground level that's really going to instantly help. So I mentioned previously that new national insurance threshold is only coming in from July. Now the reason that is because practically it's almost impossible. Like we have a payroll team upstairs, and ultimately we have to wait for the software providers to update the software to then get it in place, and then all those employers have then got to get their systems sorted out, talk to the employees about it, communicate it. It's a big old job. So the government have given 3 months to sort that out. I actually think that's a pretty tight deadline for software providers to get everything in place and all the rest of it anyway, but it is there. I wouldn't want to be waking up today as a software provider thinking, oh man, I've got a lot of work to do in the next couple of months. So, but that's there. So that's not instantly going to help. And what is instantly going to help is difficult to know, but what they did do is they did cut fuel duty by 5p. So it just means your price at the pump is a little bit better. Now, there's arguments around, because so much of the actual price you pay at the pump is made up of different taxes. They probably could have done more, but ultimately it's a cut, right? So it's going to help. So that is active. Probably from when this video's gone out, it's already active at the pumps now. So that is something. And an odd one really, but if you're looking at investing in energy saving materials like solar on your house, you're now going to pay no VAT on that. They're what they call zero rated it, which means the person doing it on your house is technically providing a vatable service, but it's at 0%. So yeah, you're just not going to pay any VAT. Again, there's an argument about how many people who are really struggling to pay their electric bills are now going to be investing several thousand in solar. Don't know, but again, it's a cut, right? So there is some use there if you're looking to do those things. But ultimately, there wasn't a lot of other instant impact things to ease the costs of, say, the utilities increase we're going to be seeing in April, things like that. But from a business point of view, what is interesting and hopefully good news is that they laid out a tax plan in this policy document. It's about 52 pages, made interested in reading, but if you're into that kind of thing. But what it did do is it laid out kind of, they want to take a principled approach to cutting taxes. Don't know what that means, but what they have said and they laid out is they understand that businesses need to be able to invest and they want to be a low tax party and all this. And actually, statistically at the minute, they've kind of lost the way on that. I don't think they are a super low tax party, certainly not statistically, but some of their policies kind of suggest that is the way they want to go. They're not there yet. But what they have said is starting from the autumn statement, they're going to be making some positive impact on the business taxation arena. So we don't know what that's going to be. One thing they did mention quite in detail though, is that around investment. So when you invest in things, so if you buy a new MacBook, if you buy a van, at small business level, these are the type of things we're talking about. We're not talking about wind turbines and things like that at a lot of small business level. There's some really good reliefs in what they call capital allowances. It generally allows you to write 100% of the cost off in that year you buy it. That's very generous across the country, across the world actually, taxation system. So it's a good thing. And there's different limits to that and different things. So you might have heard me talk about the super deduction. There's a video on the channel about that. And the super deduction is a version of that, where effectively they give you more than 100% in the first year that you buy it. And that's to offset some of the corporation tax increases that are coming, because they want to generate you spending money in your business. And it's quite clear from the policy document, reading between the lines, that that's something they're going to be looking at soon, is looking at tweaking that so it's a bit more favourable. So that's good news. But yeah, fingers crossed, from autumn at least, there's going to be some better news for businesses, because at the moment, my gut feeling is that we're in this place where it's going to start to feel in the next 12 to 24 months a little bit like 2008, 2010, if I'm honest. That's my kind of reading of what's on the walls, just in terms of seeing the impact of people now repaying some of these loans they had, the squeeze on wages, the cost of living, like all these things make it a very interesting financial arena. There is always a lot of opportunities in these times though, so I'm super positive about the opportunities for businesses to kind of innovate, get better, provide better value for money, and make more stable businesses. I think that was something we saw during the COVID times as well, is people really had to kind of get their act together and make sure they had a good business. So that is all positive stuff, but I don't think it's going to be easy. And I think these measures don't go probably far enough to really helping people with that. But at the end of the day, there are some positive news on there. So I'll take the positives when they come. And then finally, interesting news, HMRC are getting £161 million to help tackle debt collection and fraud and things like that. I'm very pro, if you've heard me talk about this, I want people to do the right thing. I don't want you to pay any more tax as a business owner than you legally need to. You just need to digest this 22,000 odd pages to understand what that actually looks like. But I don't want you to pay any more, but I do want you to pay it. It's quite critical. So I'm pleased to hear that they are going out and trying to get some more compliance in this area, because I think for too long they've allowed themselves to kind of get taken advantage of. We've certainly seen that through the COVID funding. And I'm positive about that. But how that's going to affect you as a business owner if you do owe tax is that, and this happened again using the 08 to 010 type feeling, before that time, it's very easy to rack up like a big tax debt and the revenue just kind of be a cheap credit card, which is ridiculous really when you think about it. But what happened immediately after that is suddenly the revenue had resources, they went out, they collected debt, they pushed you for it. And I have a feeling that if that amount of resources going into those departments, that's also going to happen. So if you're in that area, make sure you communicate with the revenue, get time to pay arrangements and all these things so that you can just get your tax debt under control. So there is that. And then on top of that, it's not business related, but they're pouring 500 odd million into the Department of Work and Pensions for a similar reason, fraud detection and things like that. And again, I think that's great. Hopefully that's protecting the taxpayers' money as well. So if you want to read the small print, this 52-page policy document, I'll link it below, and just flip to the back pages and you'll start to see the bit around business tax if that's of particular interest to you. And download that and have a good read before bedtime if that is the kind of thing you're interested in. So if this video has been useful, please do share it with somebody who you think needs to know this information, and I'll see you in the next one.